627, staying with markets. The conflict between Iran and Israel has had the world on edge, including those world markets. So how did they react, if at all, and what do they normally do in this type of geopolitical event? Harry Smith from Fisher Funds is with us. Good morning.
Hey, Chris.
So how has the share market reacted?
It's been quite muted, Chris, actually, the global share market. We did see an initial dip, but in most instances, like these sort of geopolitical conflict sort of blow-ups, share markets don't seem to react all that much. So we saw that initial bit, but then share markets have actually come back.
So why don't you get so much movement then?
Well, there's certainly a huge number of headlines, aren't there, around the conflict, as there should be, because the tragedy is very real. But headlines don't always mean that the share market is going to move. I think there's a few reasons for this, especially with this conflict. So the first one is Israel makes up about 0.3% of global equity markets, and Iran doesn't really feature. So in the context of share markets, the region's actually very small. Secondly would be isolation. So when you're looking at global share markets, there's a huge number of things going on around the world at any one time. And you can't just look at one conflict in isolation. So a great example of this is actually earlier this week when the US struck Iran and then Iran retaliated. Well, there was also central bankers in the United States talking about the potential to lower their benchmark interest rate ahead of what the market expectations was. And so that actually lifted share prices, or was one of the main reasons share prices rose in the United States after those events. And then thirdly, I'd say is earnings, right? We know a share price is all future earnings of a company back into today's dollars divided by the number of shares. Now, a big driver of share markets recently has been the large tech companies and the artificial intelligence theme, what you just had on earlier before I arrived. And so if you think about a company like Nvidia at the centre of that theme, their earnings aren't really impacted by the Iran-Israel conflict, as sad as it is. So there's no real reason for their share price to be lower.
Yeah, you were saying that isolation from being away, so far away from everything. One thing that we could kind of keep an eye on in terms of its relevance to us here is oil prices, though. What was happening there?
Yeah, so oil went into the conflict at about $65 a barrel. It rose to $80 a barrel, which does sound like a reasonably large increase. But to put that in perspective, $80 a barrel was the average price during 2024. It's now, since the week has developed, oil is back down to around about $67 a barrel, I think. So it has come back down. I do think oil is one to watch, though, for sure. Like if we saw the conflict reignite or spread through the region and we saw a real spike in oil prices, that is something that people should be aware of, because, you know, essentially consumers would get hit at the pump by higher petrol prices. Businesses would be faced with higher costs. So if we bring it back to earnings are what matters, well, that would be negative for company earnings, and therefore you could see share prices decrease on a spike in oil prices.
Harry Smith from Fisher Funds. Always a pleasure to have you in. Thank you for coming in today.
Cheers, Chris.